S&P, NASDAQ up big today. CPI was just reported, came in at 2.7%, which is a little bit higher than October, but right in line with expectations. So guys, inflation continues to be the conversation to be had. It's going to dictate interest rates, the policy from the Fed. We now have a new president-elect. He has actually said that he is going to keep Fed Chairman Powell. And of course, we have to see if that actually happens or not. But I think Fed Chairman Powell is up at the end of 2025, early 2026. So guys, inflation was 2.7%, but let's look at the breakdown here. I think it's important to understand that excluding food and energy, which is core CPI, and remember, the Fed's goal is to have core CPI at 2%. They're actually at 3.3%. It's all items less food and energy. That is core inflation, which is exactly in line with October. It was also 3.3%. So that core inflation number is actually a lot higher, and here's why. Look at energy, down 19%. That's incredible. Some of the areas in energy are down 19% last quarter, in the last month. That's a big drop. Gas prices, I saw for the first time in a long time, are below $3 per gallon across the U.S. That's pretty impressive. That helps keep prices very low for people. 2.7%, not bad. Not bad at all. Guys, we were spoiled from 2000 until 2022, having very low inflation for long periods of time. Yeah, there was a blip in 08 and 09 because of energy prices skyrocketing, but these are things that affect everyday Americans because when prices go up and you're living paycheck to paycheck, you have to put it somewhere. You have to put it on the credit card. And guess what? We have seen that happen. Let me show you. This is non-housing debt. Keeps on climbing at a faster rate than GDP. And that's what makes me go, okay, people are putting more debt on to meet these everyday costs, especially when they were skyrocketing 8, 9, 10% like they were a year and a half ago. Of course, people had to go to the credit card and say, listen, I need to get food. I need to get diapers. I need to be able to live my life. If I have to defer some payments for a while, I will do so. Understandable. And overall, guys, inflation can be very scary, especially when it's big jumps in short periods of time. Any sort of regular inflation where as time goes on, it kind of meanders about, people can adjust to that, knowing that, hey, listen, my pay is going to go up 3 or 4%, inflation will be 3 or 4%, so you're basically keeping up. But remember, when it comes to any sort of investing, everybody wants to look at these things and say, what does this mean? Relax. It doesn't mean much in the long run. You look at the history of the U.S. with booms, busts, inflation, no inflation, all the things that happen. And at the end of the day, what matters is what price are you paying for cash flow? That's what we're trying to do. That principle-driven investing that we've started to talk about. We want to make sure that we are teaching that process of understanding what really drives overall returns. That's basically what price are you paying for your investments. Yes, in the short run, these numbers can affect you emotionally. They can really drive you nuts. I don't blame you. It used to happen the same thing for me. But after time, I was like, wait a second, there's a lot of crap that happens out there. Does it really affect things? I don't know. Now, guys, from these numbers, everybody's thinking to themselves, okay, what's going to happen at the Fed meeting? Well, this is the Fed meeting probabilities for December 18th. 96% chance of a 25 basis cut to 4.25 to 4.5%, because we're currently at 4.5 to 4.75, and a 3.8% chance of it staying the same. Nobody's even banking on an increase, and nobody's banking on a half rate cut. I saw today it popped up, and I thought it was interesting. Vanguard said today that it was basically a guarantee that the Fed cuts rates. I thought it was interesting because the core inflation is at 3.3%. They want it at 2%. I would have thought it would have been a guarantee that they at least stay the same or increase if they're trying to keep inflation down. That's my point. It doesn't make much sense. If their goal is to keep inflation down, you don't do that by cutting rates. And yet 96% of the market thinks that's what's going to happen. And they very well could, because they're still human and they're still going to be affected by people's requests, as much as they might say they don't. But I look at it going, if our goal is to keep inflation down, how is lowering interest rates making inflation decrease? Now, obviously, unemployment is at 4.2%, and people think, oh my God, it's so much higher than before. Yeah, we got 3.5, 3.6% before. But guess what, guys? 4.2% is still extremely low. Extremely low for history. We should have between 5 and 6% for full employment. That's non-inflationary. It allows people who are qualified to get jobs, allows other people to go get more training to get more jobs. When you're at 3.5%, 4%, everybody's basically being hired to do anything because they need bodies in their offices, in their retail, all these things. That's what happens. And I'm sure everybody out there is thinking about somebody at work going, that person was basically hired because we need people in the office. I get it. And it's a lot of things to think about. But again, what really drives investment returns in the long run with a very high correlation is what price are you paying relative to value? And we're still at insane highs of that one. We're still at metrics well above the 2000 dot-com bubble. Now, if you look down here in very small print, I'm going to speak out loud to you. This is how much the probabilities have changed. 1 month ago, on November 11th, it was a 65% chance of a rate cut, 35% chance it stayed the same. Now we're at 96% versus 3.8%. So things really shift. Just 1 day ago, it went from 89% to 96%. Why? Because its inflation number came out, which boggles my mind still. I don't get it. By all means, comment below if you can explain to me why higher inflation, 3.3% versus 2%, would be an automatic, we're going to cut rates. Again, I would have thought the exact opposite. It absolutely blew my mind, and the markets seem to love it because it means lower rates. So markets are skyrocketing. Great. Guys, I repeat till I'm blue in the face on this channel. I don't think the last 5 or 10 years are going to be replicated in the next 5 or 10 years, but time will tell. Time will absolutely tell. Now, guys, a really interesting thing that happened yesterday was GameStop reported a surprise profit on still declining revenue. And I was going to go to Twitter and say, how does GameStop turn itself around? Does it just exit this business completely and restructure in some way? Like, I look at this saying, this is a business that I feel is fundamentally flawed because over time, we're going to be making less and less devices for gaming, less and less hard games for gaming. Like, I have a PS5 at home. I just download the games. At some point, we're not even going to have PS5 consoles. We're just going to have internet-based gaming systems, right? So I look at this thinking to myself, okay, let's look at their financials here. Annually, 9.3 billion, 9.36, 8, 8.5, 8.3, 6.5, 5.09, 6 billion, 5.93, 5.27, 4.55 in the last 12 months. What's going on? How does this business continue to operate in the future? Net income, last 5-year average was a negative 275 million. They had, last year was barely a profit, but in the previous 1, 2, 3, 4, 5 years, it was negative profit. I don't know. It's a tough one for me. But I look at it going, hey, more power to them. They had a surprise profit. That's great. But how do they continue that, especially with declining revenue so precipitously? I mean, that's just a tough one. And then a judge just blocked the Albertson and Kroger merger. So let's see how that happened. They said it was going to be against free markets or something. Kroger's up $1.24, so 2% today, still hitting what appears to be all-time highs, or very close to it. All-time high of 62.78 was hit on April 8th of 2022, and we're now at 61.97, so very close to it. But that was another blocked merger by a judge. Very low margins in this business, guys. 1.5 to 2% right here. Look at that. Very low margins. 22.4% gross margin. As you guys know, I own Sprouts Farmers Market. I was fortunate enough to buy it a while ago. I think it's a great company. Don't buy a company just because I or anybody else on the internet does it. We are trying to teach a principle-driven investment idea where you sit there and look at things and say, we are investors, not speculators. Every investment's the present value of all future cash flows. And if we don't understand something, we don't buy it. I can understand this business, but at the end of the day, it still needs to be the valuation that makes sense. And I don't know if it is. It could very well be. So guys, if a principle-driven investment thesis makes sense to you and you want to get better at it, sign up for our community. All these tools, we have all these tools up here. Go to everythingmoney.com. We have limited number of daily spots, but you can try it out for only $1 per day. If you love the idea of being able to make decisions and not care where the market is going based on those decisions, this is the place for you. We want you to feel comfortable and great going, I bought a great company at a great price. If the price goes lower, the market's probably wrong. I'm going to continue buying more. It's a hard thing to get around, but if you're able to do it, you will sleep better and you will probably get better returns. So go to everythingmoney.com, click the link in the description below, sign up, $1 per day. It'll be the best decision you've made all year. Thank you for your time.